Imagine you are walking around your living room, perfectly happy and calm. You reach into your pocket to grab your car keys, but your hands feel absolutely nothing but empty air. You quickly realize there is a giant hole in your pocket, so your heavy keys slipped out and fell somewhere. You spend the next 10 minutes aggressively searching under the sofa cushions, behind the television, and inside the kitchen cabinets, but your keys are completely gone. Instead of simply admitting that you bought cheap pants and carelessly dropped your keys somewhere, you suddenly come up with a wild, crazy story. You convince yourself that a highly intelligent, invisible ghost specifically haunted your living room just to steal your tiny metal car keys. You actually believe this ghost has absolutely nothing better to do with its supernatural powers than to ruin your Tuesday night. This exact crazy story happens in the trading world many times when a smart money trader loses money. Traditional price action traders know exactly what happened when they buy a stock and the price suddenly hits their stop-loss order. They place their stop just below a very obvious swing low, or a support area. When the price moves slightly below that swing low or support area and kicks them out of their trade, they simply accept that they dropped their keys. They realize that a massive amount of sellers simply overpowered the buyers at that moment. They understand that trading is a probability game. So, they happily take their small, calculated loss and wait for the next opportunity. The price might completely turn around and shoot up to the moon without them later, but they accept that losing is part of trading, and that this kind of market movement is natural. The price just did not have enough buyers at the entry point, but found them at a lower level, which pushed the price higher later. But smart money marketers looked at this completely natural losing trade and decided they needed a much more terrifying story to explain it. They call this drop in price that triggered the stop loss a liquidity grab or a stop hunt. They tell their followers that a giant banking algorithm specifically knew we had placed our tiny stop losses. According to Smart Money, an evil banking matrix purposefully pushed the price down below the obvious support level to trigger all the retail traders' stop orders. They believe that the banks violently stole their money to fuel a giant secret rocket ship that will instantly shoot the market price in the opposite direction. So, when a smart money trader gets kicked out of a trade, instead of admitting that they dropped their keys, they blame a multi-billion-dollar banking ghost. They believe it specifically targeted them just to steal their lunch money.